I'm your host, Effie Pilarino, and today I have the pleasure to connect with the US and with a good Twitter friend for the last year. We have the pleasure to have with us Dan Weiskopf. If I pronounce your name correctly, Dan, welcome.
Thank you for having me. Thrilled to be here. And I really very much enjoy all your tweets and postings on LinkedIn. You do a great job covering the space, both the blockchain space and the ETF space.
So Dan, so everybody knows you. I mean, you wear so many hats. I know you from your multiple or diverse involvement in the ETF space, and maybe you can tell us how far back that goes. I know you're spearheading, I think it's the biggest blockchain ETF these days, Block, BLOK. We can talk about that and the asset management business behind it. We have lots to talk about. So why don't you tell us a little bit about your journey in this space, the ETF space?
Sure. Thank you. So been involved in the ETF space for almost 20 years, writing about them and managing portfolios using them. When I was at UBS, I spent some time building a database. Today, my role is multifaceted, as you were describing. I did write a piece recently last year highlighting how people could measure ETF innovation. I host due diligence calls on the ETF think tank. At Toroso, I'm a portfolio manager, and we have assets under advisement of north of $6 billion. So I play a role there. Under that umbrella is, as you were saying, Block, which is actively managed and focused on the blockchain and crypto space. It's very exciting, to say the least, to watch that evolution. Block was launched January 2018, so we're now 3 years old, and I think over $1 billion in assets.
It's just amazing, Dan, because I remember looking at ways to invest in to gain, if you want, the blockchain exposure through the traditional markets, and I looked at the ETFs that were out there. It was just September 2020, and I mean, Block was already on the top, but it was just over 100 million assets under management, and now you're telling me that it's a billion. I mean, it's just amazing what has happened. Tell us a little bit more about what are the holdings or the spectrum, if you want, or maybe the top holdings and the exposure that shows where the growth or the interest is. Is it in mining? Is it in enterprise software? Is it in, the asset management plays? There's so much in the space these days.
Yeah, well, I can't remember if it was in October or November when we had Michael Saylor on our Thursday happy hour. We had been building a position in MicroStrategies beginning when it was $140 a share. Listening to his excitement to some degree, frankly, was intoxicating. And he definitely got it right. And so MicroStrategies today is one of our top holdings. We've been very fortunate to see that growth. Now, I think the news on the tape today is that he did a second convert, and he was seeking from institutions to raise $600 million. it seems that just based on the news on the tape that he raised $900 million, and that may end up being $1 billion. And institutions are coming into crypto. I mean, they're trying to figure out ways to play it. And candidly, we're one way. We actually have had a very high correlation to crypto and Bitcoin specifically. But let me be clear about something. As much as everybody is so excited about how Bitcoin is trading, and all the coins are trading these days. Well, some are good, some are bad, but I'm very excited about the blockchain and the evolution on how that's going to affect various industries. But to answer your question differently, um, we break the world down in just the same way that we broke down the ETF industry, meaning that you've got asset managers, you've got trading platforms, you have in the ETF marketplace, you've got wealth management. So it's a little bit of picks and axes. In the way of the block specifically, roughly 20% right now is in the miners. Okay. There is about 35% in what we call exposures in venture. Um, and then, there's the transactional side, meaning the Square and the PayPal and the Voyager, where those companies are providing access to buying crypto, and that's about 28%. So we've kind of broken down the space so that it's manageable.
Interesting. And we will, it seems that we will be having more IPOs and more exits in the public market, so there'll be more to choose from. Now, Dan, I mean, you're close to the world of financial advisors in the US. How are things there in terms of education, understanding, interest, sentiment?
Generally speaking, we I would say that financial advisors have a tough situation here because the market is trading, no matter how you measure it, with some excesses, right? There are a lot of concerns out there. We're in uncharted waters, and I'm speaking, of course, about whether it's the blockchain or the US market or the European markets, right? There's lots of challenges out there. And the financial advisor who is doing the proper work is trying to keep their client focused on the plan, the investment plan, the savings plan, the wealth management plan, while also managing risk. And when I look at the ETF marketplace, that you can throw out any number in globally it's 8 trillion, as I think you were suggesting, and I would say that number is correct. It's going to double or triple in the next years to come. And I think though that when I look at innovation in the ETF market, I think we're going to see different types of solutions, more of the alternatives or different types of risk on risk off strategies. And so it's going to require them to work harder, some of these financial advisors.
So essentially, you foresee that the growth of the ETF market will continue, but we will have more active or alternative strategies emerging, and maybe from the new launches, the biggest percentage or the successful part will be from these innovative strategies or alternative strategies.
I'm not saying that the asset flows will be concentrated in the alternatives side of the ETF market. People like free or cheap beta. I mean, that has been done, and it's easy and it's explainable, and clients like not to pay. Um, but what I'm saying is that the innovation side of the ETF market will also be growing in a very rapid way. But you've got to look beyond the broad asset numbers.
Understood. Understood. Any thoughts, Dan, about the fintech market, especially the US fintech market? Um, we are seeing, I mean, I'm monitoring all these fintech SPACs, going to market. I'm sure you and I could be quite cynical about EDF SPACs, right? Or SPAC EDFs, whatever you want to call them. I assume Toroso doesn't have one, right? I'm just you do it, I didn't know.
We do launch ETFs. We launched, I think, 18 since 2019. We do not have a SPAC ETF. There are 3 of them out there already, and I think the thought was you didn't need a 4th. Having said that, I like the SPAC market. I think there's an opportunity for ETFs to provide access to the SPAC market in various different ways. So I'm excited about what's happening in the SPAC market.
So having said that, do you see this evolving and growing much more than any of us thought? And what do you think of direct listings? How does this play in what's going on in capital markets?
Wow. So I think it's Coinbase that's coming out with a direct listing, and when we look through the lens of the blockchain ETF, we see a lot of opportunity both with the SPACs as well as direct listings because we're actively managed. I mean, that's a key distinction about what we do, and something maybe I should highlight a little bit further. When I was talking about ETF innovation, I'm very excited about how ETFs are embracing the active management side and not just always being passive. Sometimes there's a gray line between passive and active, meaning that we've looked at a lot of ETFs that are rebalanced quarterly and making changes, I would say possibly 4 times a year in a meaningful way. It's a little bit of a gray line as to whether or not they're active or passive, but by definition they are passive. But when you have pure active ETFs like ours, we can make decisions on a daily basis. And certainly in our case, we're reviewing the portfolios on a daily basis.
And in any case, your rebalancing decisions are not based off an index, some benchmark, correct? That's the major difference. What is the qualitative core difference? It's not
Yeah, so
the frequency, right?
when we looked at launching Block, there was an opportunity to do a straight index methodology or do pure active. We have an index that we use as a framework, so we know kind of where the innovation is taking place, right, based on a certain level of expertise. But we're not interested in tracking error. And with all the innovation that is taking place on a regular basis, I just don't think an index can be created to adapt to the future change.
Well, I don't think that there is a big need at this point for an index. Maybe later when the market matures, and then maybe it won't be falling under the innovation category or the asset allocation into innovation, right? And
Y-
that's a whole different game.
Yeah, Effie, I mean, when we were talking about the block, when we were talking about the SPAC side, right? And I see on CNBC they've got an index that they created on SPACs, right? And what it does is it creates a media opportunity to illustrate how things are going, but it doesn't really necessarily adapt to how the marketplace is changing. And as you know, as an expert in the financial markets, right, especially in the SPAC side, the number of filings that are taking place on a regular basis, an index just, as you said, couldn't keep up.
Correct, correct. I mean, Dan, what else are you seeing in terms of innovation in the market, in the investment space? I mean, you are concentrated in the ETF wrapper. Do you have an eye on what innovation might come in terms of a wrapper? Is the market safe? What are you seeing? What's on your radar, if you want?
Yeah, our on our radar is a lot of focus around risk on and risk off. Um, One of my colleagues is Michael Guyad, and Michael's been talking about risk on, risk off for probably north of a decade. He joined Turoso this past year, um, and as he always says, conditions change, right? We're in a unique environment right now, but we know that there's a lot of risk. So, you were asking about how financial advisors are doing. Well, the question ends up being, when those conditions change, how are they going to adapt to the new environment? And what will that new environment be? Because I'll be honest, I don't have a crystal ball, and I don't know that anybody does. But I know that interest rates are, globally at historic lows. The environment with Corona, sadly, one day might be a little encouraging, but another day we don't know, right? And the economic environment globally is just really hard to forecast right now, no matter which geography you're looking at. And then, of course, you've got to ask the question: in which geography are the interests of the constituency aligned with the other people and the other geographies? Sadly, there's a lot of debate here in the U.S. about China, and how that works out, of course, is anybody's guess. But you know, this is the challenge that we're in right now.
So multiple uncertainties are definitely, we can all agree on that. No doubt about it.
Yeah, yeah, which is I think part of the reason why there's so much optimism around you know crypto. People are paid to take risk right now. People are paid to search for innovation and different types of opportunities, and it's working now. And we're fortunate to be providing access to all of that through the blockchain ETF.
Well, I guess, this goes along with the model that, we have so many issues that we continue to place our hope in technology, that technology innovation powered by technology is going to solve, because there isn't anything else that we can depend on. The system it has a lot of uncertainties and complexities.
It does. Maybe slightly changing the subject, but something that I wrote about this past week that should be coming out, I think tomorrow or the next day, is an example of, sadly, I think a company that hasn't innovated, that frankly, in my judgment, should be more aligned with crypto. Cisco Systems came public in, I think it was '89. Did wonderfully for, I think it was about 15 years or so. But the last 10 years or 12 years, they've spent $100 billion buying back their stock. And it's a wonderful franchise, and I know they're working hard on the blockchain. But if there's no revenue growth and you're buying back your stock and your stock price is kind of meandering along, and you're a technology company, I just don't think that's the best solution, right? So when I look at what Michael Saylor did with his cash and taking the risk that he did, and I see what a company like Cisco has done, sadly, I say, well, you know what? That's great for the value investors, but it's not great for technology innovation. And as you probably also know, Cisco Systems, the person who founded Zoom, which we're all using today, right? Came from Cisco when they bought WebEx.
I think that there'll be many books written or documentaries about the innovators, where they came from, what opportunities they grabbed. We definitely live in an extremely interesting time. I was actually reading this morning where Stani, from the founder of Aave, the DeFi protocol that has grown so much over the past 6 months, where he was coming from and how all this came about. So, so many interesting stories, lost opportunities, or others that grabbed opportunities. And again, I must congratulate you, because you guys did take the decision to launch a blockchain ETF in 2018. It was not obvious at the time. There wasn't the hype, and here you are growing a wonderful product that is very much needed in this market. And with that note, Dan, thank you so much for being with.
Thank you for having me. This was a wonderful dialogue, and keep the tweets coming and your postings on LinkedIn. I look forward to them all the time and learn a lot from what you're writing.
Thank you, Dan. Thank you for being with us.